Welcome back. Your morning mover this morning is NVIDIA. Take a look at the stock in the pre-market, up a fraction. Shares of the chip giant trading higher ahead of third quarter earnings after the bell tonight. Projections for NVIDIA's results higher, with analysts expecting revenue to rise 84%. Driven by record sales from its data center segment. Wall Street is also estimating earnings of 75 cents a share on $33.16 billion in revenue. This stock is up 196% year to date. Let's take a look at futures this morning, indicating a gain at the start of trading. Once again, the Dow Industrial's up 78, the Nasdaq up 21, S&P 500 higher by 7. Stocks, of course, green across the board year to date. Very strong performance going into year end, with the Dow Industrial's up 15%, the S&P up 24%, and the Nasdaq higher by 26% in 2024. Goldman Sachs' U.S. equity strategist sees the S&P 500 reaching 6,500 in 2025, even without the help of the magnificent 7 tech stocks and their massive outperformance. Joining me now is 42 Macro founder and CEO Darius Dale. Darius, good to see you. Thank you so much for being here. Do you think this rally has legs rest of the year? What is your outlook heading into the new year, 2025?
Well, unequivocally bullish, and it's great to see you as well, Maria. So thanks for having me. So unequivocally bullish. Goldman's got a 6,500 price target out for the end of next year. We think we can get there by early to mid-April. I mean, we talked about it the last time I was in your program in early September, where we were telling people to buy the dip in August, with that you could very easily see about $700 to $800 billion of liquidity pumped into the financial system in the first quarter of next year as a function of what is likely to be a lengthy debt ceiling impasse, much like what we saw in 2021 and 2023.
Well, certainly the policies that we're expecting from this new administration are business friendly. Adam Johnson, weigh in here. You agree with all that?
Oh, I absolutely do. And here's how we get to 6,500. $280 of earnings on the S&P 500 versus 245 this year. So from 245 to 280. 280, you put a 23 multiple, 23 PE ratio on that. That's 6,500. So it's absolutely within range. And we're not that far from it anyway.
And it's because of strong earnings, a good backdrop.
The story is strong earnings, strong GDP growth, solid employment, falling inflation, and lower lower rates, and then you add to that Trump tax cuts, lower regulations, and drill baby drill. That's a very strong package.
Darius, what do you make of rates, however? The 10-year Treasury yield this morning is trading this way. Investors are weighing the Federal Reserve's next rate decision. The meeting is in December, and yields are up again. This morning, the 10-year is up 3 basis points, sitting at a level of 4.42%. The futures market pricing in a 60% chance that the Fed cuts rates by 25 basis points next month. Meanwhile, Apollo Global Management's chief economist, Torsten Slok, says that the steady stampede into money market funds is likely to reverse as the Fed keeps cutting rates, writing to clients this: the most likely scenario is that money will leave money market accounts and flow into higher yielding assets such as credit, including investment grade private credit. Darius, what do you do in the bond market now?
Well, what do you do in the bond market? You do what we've been telling people to do all year, which is to shun duration. We're in a risk-on market regime, and when you're in a risk-on market regime, it pays you as an investor to go further out on the risk spectrum. So you do want to be in pockets of the fixed income market like credit, well, obviously one of the best performing asset classes there on a risk-adjusted basis. And so as long as we maintain this risk-on market regime condition, which in our view is like primarily driven by a confluence of our themes that have all come true in the minds of consensus this year. It's our resilient U.S. economy theme, which we started back in September of 2022. It's our here comes the liquidity theme, which we started in September of this year. And then it's our asymmetrically dovish Fed theme, Jay wants a soft landing, from last November. And as you put those three things together in becoming consensus, then you see continued gains to the upside over the next, let's call it 1 to 2 quarters.
What about these cabinet picks, Darius? President-elect Trump nominating Cantor Fitzgerald CEO, key Trump transition advisor Howard Lutnick as the incoming Commerce Secretary. Your reaction?
Yeah, by and large, the cabinet picks are pretty Wall Street friendly. And they're likely to continue to be Wall Street friendly as it relates to the person Donald Trump is likely to tap for the Treasury Department. From our perspective, in terms of gauging market risk, both to the upside and downside, it's really about the sequence of policy. Will we get tariffs and tighter trade, tighter immigration policy before we get the good stuff, which is, rolling back elements of the CHIPS Act and the Inflation Reduction Act, adding the tax cuts, adding the income subsidies, and things so on and so forth. And so it's really just about the sequence in terms of the path that the markets are likely to take. But for now, in the absence of knowing anything, you have to just maintain this bullish posture.
All right, Darius, we'll keep checking back. Good to see you this morning. Thank you, sir.